Hello from Gregory and Appel. This is Andrew Appel. I'm joined by two of our private client advisors today, Leslie Appel Maher and Pat Schaefer, who are going to talk about the state of the personal insurance market. And then we will wrap up our conversation today with some thoughts, advice, tips for how to mitigate and navigate the challenging market we are in today. Leslie, Pat, welcome.
Thank you. We're glad to be here.
Right off the top, I'd love it if both of you could succinctly sum up your sense of the state of the market.
It's by far the toughest market for the consumers that we've been in that I can remember. And a lot of it has to do with insurance companies and are not immune from inflation, whether it be on inflation on homes, inflation on labor. If somebody was with an insurance company for a number of years and their value of their home, so their rebuild cost, what it would cost to rebuild with like, kind, and quality, right? If it was drastically underinsured, which means the number that the insurance company had on it was lower than what it cost to rebuild, but the carrier, they had a loss and the carrier had to pay, those carriers have lost a significant amount of money on those claims, which has impacted their bottom line. Obviously, we're having more, it seems to be having more frequency and severity of weather. Like I said, inflation's a factor on that. And it does seem that claims have gotten more severe.
I would say that that's right. Claims are the average cost of a claim has gone up significantly over the years, which is one of the reasons that insurance carriers aren't profitable and we're in this hard market because their rates have not caught up to the average cost of claims. 10 years ago, the average cost of a water claim was around $20,000. Now it's $50,000, which is a big jump in a relatively small period of time. And on top of that, many insurance carriers have a deductible waiver, which is $25,000. And if you have a loss that's greater than $25,000, your deductible is waived. Well, that was great when the average cost of claims was under that threshold. Well, now most claims are over that threshold, so they're waiving their deductible and they're not getting, they're losing money on that.
Well, if they had a $500 deductible and they had a $2,000 claim, they're submitting that claim, which is now really affecting their rates, as opposed to maybe just self-insuring and paying the claim out of pocket.
I want to come back to the industry side of that equation, but I think it's good to spend a little bit more time about that claim scenario that you were talking about, because I think most people would say, well, that's why I buy insurance, right? It's supposed to pay claims, which is, let me fundamentally say that is absolutely the case.
Correct.
But could you maybe kind of go into the nuance as to why having a conversation with your advisor over claims that are within a certain dollar amount of your deductible would be prudent?
Yeah. So I'll give you two good examples. The first one I was saying, where it was a $2,000 claim, maybe you have a $500 or $1,000 deductible. The insurance company bears the cost of sending an adjuster out, processing the claim, and if they come out, let's just say they came out and it was, the claim was $2,000, insurance company's paying $1,500 of that. They actually may have more in expense of the adjuster's overhead, the time to process the claim. They may have actually more money tied up in that than the actual claim payout was. If you can take some of those smaller claims and self-insure them and pay them out of your pocket, those people that have done that are in a much better position to potentially either stay with their current client current insurance company, or we can then go out to our other carriers and they're going to be more of an attractive risk profile or account because they have not had these small claims. In the Midwest, we get a lot of hail, right? And it's, you talk to your neighbor and your neighbor says, well, hey, I just got a new roof because we had hail 3-4 weeks ago, whatever it might be. Our philosophy here at Gregory Appel is, hey, before you file a roof claim on your hail, why don't you let us send one of our, vetted, approved roofing contractors to go out and look? Because what happens a lot, every roof type's different, right? Every roof has different ages, trees affected. There's so many things that go into a roof hail claim. And if we can get one of our professionals out there that says, hey, this isn't going to be approved, we've avoided a zero pay claim. And even though it's a zero, it says zero, which means no money was paid to our clients, there is still that administrative cost that the insurance company has bared. And if we try to move you to another carrier and an underwriter who's looking at your account sees the fact that you filed a claim and nothing was going to be paid out, they're immediately going to think, oh, there's damage to the roof, and we're going to end up buying the roof at some point.
Absolutely. And what's interesting is the amount of hailstorms over the past 5 years has not changed. We've had the same number year after year. So it's not like our hailstorms are getting stronger and more frequent. But what is happening is roofing contractors, going door to door and saying, a hailstorm was here and your neighbor got a new roof. Can we give you a free estimate? So those claims are getting turned in on a more frequent basis. And sometimes, as you alluded to, they're getting denied, which results in an upset client. We always want to be on the front end of that. And before we involve the insurance company to advise and really determine if it's smart to file the claim or not.
Then what we've seen with, there are carriers that are exiting the personal lines, riding home and auto and umbrella coverage. We're seeing, 3 to 4 companies just in the past 3 or 4 months, they're actually getting out of it. They're not going to ride it anymore. And part of that is that, first of all, it's very unprofitable for them because their rates were too low and they really can't raise their rates enough to cover their potential losses. But a lot of that is they've paid for a roof that's 25 years old, that's at the end of its life. Yes, we had hail, and yes, there was probably hail damage, but that roof, that person now is getting a brand new roof, which is fine. But if they had a newer roof, it might have been more hail resistant, right? But since it was at the end of its life, it's more brittle, so forth, and so on. And so many of these carriers, the trend we're seeing just with roofs is they're putting a percent deductible. So it's a separate deductible. So maybe your home deductible is $1,000 for a water backup or a sump pump failure, but the roof is now a percent of the insured value, so the dwelling. And I think that is going to be the trend. And I actually think most, if not all carriers, not just in the independent system, because we're seeing it in the direct to consumer, again, the State Farms, the Allstates, the farmers, they are now going to that as well. I'm amazed, 2 or 3 years ago, you could see a 3,000 square foot house. They could get a roof for 10 to 12,000, and now that's 25,000. It's just crazy how expensive roofing materials and labor has gotten. And that's not just in the Midwest, that's throughout the country.
I can speak from personal experience. I just replaced my roof, not an insured loss.
Did you let your insurance agent know? Because that can often result in a lower premium.
Well, we'll get to the tips that individuals can use at the end of this, but thank you for jumping there. And yes, I did inform my insurer that. But no, I mean, from personal experience, it was 5 times as much as it cost 15 years ago to replace my roof, and exact same basic asphalt shingles. So the cost increase is real. We've spent a lot of time talking about the property market here, and I know we're going to circle back to it when we start talking about, whether it's deductible management strategies or how to approach renewal. But I wanted to level set a couple things because we're all guilty of using industry jargon in our jobs. But Leslie, you specifically mentioned hard market a couple of times, and I think probably the most succinct description of that would be it's a cycle in which insurance prices are increasing and insurance availability is decreasing. The other one is both of you talked about kind of the increasing frequency of natural disasters. And, Leslie, while you acknowledged that the incidence of hail haven't necessarily increased, the prevalence of maybe what we could describe as social inflation or societal factors have resulted in more losses. But I'm going to get the numbers slightly incorrect here, but the general gist is going to be right that to date in 2023, we're approaching 30 separate natural disaster events in the United States alone that have resulted in over $1 billion in total insured losses. I think the average is about half of that, and that's been increasing over the last decade. So the costs are absolutely increasing. Kind of on the moving from the property side to the liability side, which, whether it's your homeowner's insurance, whether it's your, personal umbrella, or whether it's your auto liability insurance, like that's a big component of what a lot of people pay in their insurance premiums. Leslie, do you want to start a little bit on kind of what you're seeing in the liability markets?
We live in a litigious society, and that's not changing. And if anything, that's becoming more evident over the years. I will say that the liability market is becoming harder. It's harder to find higher levels of liability limits for clients who are in need. And that's due to several reasons, but I would say the largest is because of accidents and then the lawsuit that follows and the settlement. The settlements are becoming higher and higher. So, an auto accident with an injury involved can range in the tens of millions of dollars. And again, it's the insurance carriers that are paying that. So when it comes time to placing coverage for a client, the insurance companies are asking a lot of questions. Have there been any accidents? If the answer is yes, sometimes we aren't able to find the proper liability limits for that client because the insurance carrier won't offer terms up to a certain limit. Maybe they will only offer a $1 million limit. They won't offer the $10 million limit that the client needs to protect their assets.
And then, on the homeowner side, and in Indiana, it's part of it, but really it's Leslie and I's clients in Florida and California. Pools have become kind of a sticking point. They like to see a fence around them, but it's also, how deep is a pool? Do they have a diving board? Do they have a slide? What are the ages of the kids in the house? And that, we didn't see as many of those questions 3 or 4 years ago, and we're seeing a lot of it. And how that's affecting is depending on those answers. Can we offer a good liability policy? And if not, where do we go from there? When you look at talking about umbrella to people, you really have to know their lifestyle and what they do. What are their interests? What do they do? What are their hobbies? What are their kids' ages?
And also the carriers are asking detailed information about their net worth, where we have to disclose that information. If we're requesting a $15 million umbrella from a carrier, we have to outline the need for that, which sometimes feels invasive to the client, which I understand.
And underwriters, and those are the folks that are pricing the policy and approving it. They're doing their own searches, right? They're looking in Google, they're looking on social media to see if has this person been in trouble before, if their kid's been in trouble, and and even with on the same liability, part of the reason liabilities got more expensive is you're seeing some social media generated lawsuits, cyberbullying, whatever it might be, and carriers have covered those, and that has driven a little bit of the pricing too, as there's been more claims on that side of the equation.
And I will say, for the first time in many years, insurance carriers are taking rate increases on their excess liability umbrella policies. Those rates have traditionally stayed consistent year to year, but now we're seeing those 15-20% rate increases due to the frequency and severity of the liability claims.
Let's talk about auto for a little bit, right? So I think everybody who has been paying any attention as just consumers over the last 3 years has seen auto prices have gotten higher. Let's just say that. How have you seen that cascade through the personal auto market?
I will say that where we are seeing it the most would be on auto claims and body shops. The cost to repair cars is at an all-time high. And we're seeing some disputes among the insurance companies and the body shops on what the cost is to repair. So that's been a troubling trend that we've been seeing, I would say, just probably over the past year to two. It's not really resolving itself quite yet.
So I would also say, you were talking about the cost of the natural disasters. Let's just take, for example, Hurricane Ian that hit Southwest Florida in the fall of 22. That actually was more, it was a larger auto and boat loss than a property loss. And so when you have a flood, um, and a car is totaled, that's your auto insurance that is paying that. Those can get expensive those claims, mass claims. The other side of it too, to Leslie's point, a Honda Accord bumper 10 years ago was about $500 to replace. It didn't have the backup sensors and the cameras and all that. Now, I mean, it's $3,000-$4,000. And with that, everything, all the electronics on the car have just gotten so much more expensive. And, the rise of electric vehicles, which is great. The issue with insuring an electric vehicle is not the vehicle. It's if that vehicle gets in an accident, how quickly can the manufacturers get parts? And, it's kind of a chain effect. So if you're, let's just take a Tesla. We all love Teslas. They're great. But Tesla's output of parts is not as good as a GM or a Ford. Just they're not as big yet. But then what we run into is you've got your car's in the body shop for a repair, and the parts are going to take 6 weeks, and you're driving a rental car. Then maybe you only have 30 days of coverage on the rental car, and so who's going to pay that extra time on the rental car? The insurance company is probably not going to. The body shop probably is not going to. So, when you're purchasing a new car, it's always good to have a conversation about coverages, because maybe if you are, purchasing a harder to find parts for a car, we need to look at potentially upping some coverages. And, that's the key. The issue with that is that what else does that do? It increases the premium or the price you're paying for auto insurance. The body shops are having an issue finding labor. And so it's just it's kind of a snowball effect, right? Your car's in there to get fixed with 10 other cars, but they don't have the manpower or the labor to get all of them done. And so then it takes longer, and then you have a rental car.
I would say, well, no one likes to hear this, and I'm guilty of it too, but my recommendation, if your car is drivable after a loss, drive it until your car can be repaired, because otherwise you're not going to have enough rental car coverage and you're going to pay out of pocket.
Well, I'm glad actually both of you brought up rental car coverage, because I was going to bring it up. It sounds like it's a really nerdy insurance thing, but I mean, both of you have a number of clients who have experienced this, and I mean, this is an extreme example, but I have a good friend who 1 month into a lease was in a not at fault accident, and his car was, in this case, it was undrivable, but sat in the body shop the duration of the lease.
Oh my gosh.
Yeah. So it's a small line item on your insurance, but whether you work with Gregory Appel or you work with somebody else, at least have the conversation around your rental reimbursement coverage, because while there's not a ton of leeway there, at least having the conversation, what it is, what it does, and you can be a better informed consumer when that time comes.
I will say, because most standard carriers, the max they will offer is 30 days, and there's no ability to go beyond that. With some of our high net worth carriers, they have a flat limit of $15,000 of coverage, and you can spend that how you wish, whether you want to get a lower cost vehicle and have that stretch out, or if you want to get a car that costs $200 a day to rent, you can. But be advised that when the $15,000 is out, it's out. And sadly, it goes quickly.
If it's not our client's fault and they're relying on the person whose fault it was insurance for the rental car, once that runs out, they're like, hey, can we access our policy for another 30 days? And we can't, because that claim is not under your insurance. It's under the at-fault person's insurance.
Let's switch over a little bit to talk about maybe kind of as your policy is coming up for renewal, like what are the conversations that you should be having? And then maybe start getting into some strategies that people can do. There's until the hard market ends, unfortunately, there's only so much that you as an individual can do and that, we as professional insurance advisors can do. However, there are strategies that we can all do together. So maybe start by talking, both of you, like, how are you approaching renewals with your clients? Like, how far out are you starting to have those conversations?
So ahead of renewal, we typically like to be in touch with the client 30 days ahead of renewal. A lot of times we don't get the renewal terms until 45 to 30 days ahead of renewal. So that's the time we target reaching out. If we notice a increase, we do a couple of things. One, we offer to remarket with our alternative carriers. Like we've talked about throughout this time, we can't promise that we're going to find a more competitive rate for the client, but we certainly can try. We also offer higher deductibles. That's where we notice the industry is going. It makes more sense to self-insure a higher portion. So that means carrying a higher deductible instead of having that $500,000 deductible. $5,000, $10,000, $25,000 deductible on your home is really where we're seeing the industry moving to. A few reasons. One, lowers your premium. Two, we discussed how turning in these smaller claims really is very impactful on your eligibility with an insurance company. Another thing we look at are available credits that you don't currently have on your home policy. A big one would be an automatic water shutoff device. We are having that conversation with all of our clients as the renewal comes up. Not only do they offer a large discount on your home policy, but they are very impactful at reducing severe water losses in your home. What it does is it can sense a leak in your pipes, and if it does, it automatically shuts off your main water valve, which can prevent hundreds of thousands of dollars of water loss. So those are the things that I do with my clients ahead of renewal. Again, it's a conversation. Every renewal for every client looks different. And we're here to help the best we can. And if there aren't better options, we're at least here to have the discussion and try to provide education as to why this is happening.
Leslie's renewal process and mine look very similar. I try to reach out 30 days and look at the percentage if there is an increase on the the home and auto, and we kind of just by knowing carriers and things, a percentage that probably we're not going to be able to beat, or a percentage maybe we can with another carrier. And so much of it, it's and I have this conversation a lot. It's being a better risk manager of your own home and auto, and part of that is doing the maintenance on your home so you don't have a loss. Trimming tree branches back that are potentially hanging over your roof, or a garage or whatever. But and Leslie's point is really well taken on the automatic shut off. I have one on my house, so I had a big water loss. I was on vacation, I came home, and we had a pipe that leaked, and it was pretty severe. And I have one, and so these devices are so advanced. They learn your habits, right? They learn when your water softener or when you're running your dishwasher, and so that really is good. They also know when you've not been home because your water consumption is down. So I mean, I could look right now on my phone, pull up the app, and tell you how many gallons of water my household used today, right? But people will say, well, I don't want to spend the $700 or $800 to get it done, or $1,000. And it's not just to me about the discount, but it's about the inconvenience of having a claim, having workers in your house, the noise, the dust, not being able to use certain parts of the house. That inconvenience is real. And if you can reduce the length or time or severity of a claim with these devices, you're going to be happier in the end, and it's going to be worth a lot more to you personally than just spending the money to get it installed. On the auto side too, these have been out for a while now, but these carriers have telematics. So basically, they will watch your driving habits or your family's driving habits for a period of, I think it's 60 days. Every carrier is a little different. And if you have better than normal driving habits, then you can get you get a discount for putting that on your policy, right? And then you can get a bigger discount after the driving period.
Spoiler alert, if you carry a smartphone, they already know.
Yes, 100%. Yeah. Like Leslie said, look at your deductibles, making sure you have all your discounts. I mean, on the auto, if you've got youthful drivers or you're getting the good student discount. If you've got a vehicle that you just drive in the summer, are you, making sure that that's listed as a very limited pleasure vehicle? Just looking at all the available discounts and making sure that they're applied it goes a long way in helping reduce your cost.
So what I'm hearing is have the conversation. That you might not like the end price. We don't like the end price either. But by having a conversation, we can work together to do everything we can to try to mitigate that. So last question for me, and this is specific to Gregory Appel clients. So let's say you're one of our personal lines clients who, maybe is making that jump. A lot of carriers have already pushed people to $1,000 deductible. So maybe you're saying, okay, Leslie, Pat, I hear what you're saying. I don't love it. I'm still going to take an increase, but I'm going to move that $1,000 deductible to $5,000 or $10,000. What services do we at Gregory Appel have for that person when they have a claim? Maybe it's an $8,000 claim. They're now self-insuring. Like, even though the carrier is not involved, do we still have services that can help the individual at the time of loss?
Let's just take a roof, for example. Sometimes it's not a full roof replacement. Maybe it's just a portion that needs to be redone, or maybe it's a copper eyebrow. I actually had that account where I had a client that had to get a copper eyebrow over a bay window, and it was $700 above his deductibles. It was like about $2,500 roughly. And I said, hey, I would not turn this in. It's your call ultimately, but I wouldn't turn this in. And he said, okay. And I said, where did you get your estimate? He said, well, I got it from some company. And so the gentleman that we used, we use a few different companies, but one of the gentlemen we used, I called him and said, hey, can you go look at this and treat it like this guy is, I want the best price because he's not going to turn in an insurance. And he went out there and he was able to shave about $500 or $600 off, which is impactful. That's a fair amount of money. And so we try to help leverage our relationships with body shops and contractors to get a better price. And, if a contractor or a body shop knows you're not going through insurance, there's also a little bit of benefit to them, quicker payment. They're not going to be negotiating as much on price. So yeah, we try to we vet all of our services, whether it's a body shop, contractor, or remediation company, a 24-hour company that comes out and, sucks up the water and all that. But we try to work with firms that we know are going to treat our clients like we would want to be treated.
And we also work with several different contractors. So we see that there can be such a discrepancy in not only price, but quality. So that's helpful if a client asks us for a recommendation. The trick is that with the labor shortage that we have, a contractor can be great last week, but then the next experience isn't the same because, they no longer have the employees that they had a week ago is what I've been finding, even when we were going through with claims. It's just an ever evolving industry.
And I would say too, one of the other things that both Leslie and I do, and we tell our clients is, hey, if you're going to buy a new house, let us see that there's been some claim history on the house. So if you're buying a house that's potentially got continual water problems, whether it's water in the basement or whatever, a lot of that is not disclosed on any kind of inspection. So, but we can see through the reports if there's been some issues there. If you're buying a house in Florida, before you put the offer in, let's talk about the insurance, where it's located, what the elevation is. If you're buying a new car, I think it's good for us to give you kind of, hey, this is what it's going to cost, so you know. Sometimes it's the same price, sometimes it's less, but sometimes it's significantly more. And not that you're necessarily going to make a decision about buying a car based on insurance, but I think being educated about what the cost is going to be can help with some alleviate some potential stress on the policy.
And, going back to your previous comment about if you're getting ready to purchase a house, there are tools out there. Pure Insurance has a great tool that we can put in the address of the property you're looking to purchase, and it gives a full report, almost like an insurability score for that location. And it pulls loss history, everything that's helpful from insuring. It's a great tool. Oftentimes we don't know about a purchase until day of closing. So my one plead is if you are considering purchasing a home, especially a coastal home, mountain home, please give us a call and we can help you in that process.
I advise all my clients when they're buying a house to pay a little bit extra and have the roof inspected by an engineer, because you need to know what you're getting into with a roof, especially the more decorative styles, the slate, cedar shake, clay tile, metal. Those roofs, not every insurance company has a big appetite for. So if you're going to purchase a home and it's got an older roof, I recommend, unless they can tell you, hey, the roof was replaced 2 years ago, here's the invoice, it's still under warranty, whatever it might be. Outside of that, I strongly encourage getting the roof inspected, wherever it may be, in the Midwest, in Florida, anywhere, because so much of what's driving costs are roofs, and it's not just a Midwest thing, it is throughout the country.
Great. Well, as we wrap up here, I've heard a couple of themes I just think is valuable to repeat back. So, first and foremost, communication. You might not like the end answer. We might not like giving you the end answer, but at the end of the day, you're going to be, again, a better informed consumer. The other thing that I'm hearing kind of over and over again, in addition to some of the deductible management tools that we've talked about, is because of the scarcity of coverage and the increasing cost of everything for insurance carriers as well as consumers, there are evolutions in technology that are helping people to be better protected and ideally avoid the loss, so that when you do have the catastrophic loss, the insurance industry is still there to be able to respond. So with that, Leslie, Pat, really appreciate it. And please just be in touch with any questions.